Thank you all for being here and joining. This is the 25th Kansas City Commercial Real Estate Market Pulse, sponsored by Midwest Commercial Real Estate Advisors. 25 episodes of deal spotlights, of bringing on experts to talk about what they're seeing in the market. And it has been a wonderful 25 episodes, and we're excited to continue on that trajectory. We have some incredible guests coming to you guys live over the next couple of weeks. I know we've been pretty heavy in regards to deal spotlights and showing the projects that we're working on, but plenty of opportunities to network and ask questions to some upcoming incredible guests. So stay tuned on that. But it's a real milestone for us here at Midwest Commercial Real Estate Advisors to be working through our 25th episode. And here's our team. And you know, we are dedicated to delivering top-notch service and results. And I was telling somebody earlier today that we don't typically get the calls and projects that are kind of down the middle. Here's a 150 unit multifamily property. It's 95% occupied and it's in a great location. We are typically getting something that has a little bit more creativity to it. And that's what we thrive on, because we're able to bring a lot of market intelligence and a collaborative approach to every client that we serve. We've got some incredible case studies here recently. If you'd like for those to be sent to you, just reach out to myself, Katie, or one of the brokers here, one of the team members, and we can send you some case studies on how we are able to get a lot of visibility utilizing digital marketing and social media and the deal spotlight like we're doing here today. But the Kansas City Market Pulse is, our goal is pretty simple. You know, it's to cut through the noise and give you actionable intelligence on what's really happening in the commercial real estate space, specifically here in the Kansas City metro area. And so today we're going to be focused on going through one of our new projects. Let me get this shared. This is such an exciting opportunity for us to bring to the market. We have 153 fully entitled residential single-family home development spanning over 53 acres in South Kansas City. You know, entitlements are in place, and we're going to get to that as well. A little bit of housekeeping before we do kind of get started. If you have any questions for us, please do drop those down into the comments and the questions, or get those over to our team. I'll be monitoring the chat, and I'd be happy to answer any questions about this project. We've had a lot of questions sent to us already to cover, so we've got a lot to get into, but we're excited about the Woodland Manor Development. And let's just go through what this project is. You know, we're in partnership with Weichert Realtors, Welch & Company, who specializes in new home subdivisions on this project here in Kansas City. They're working on over 40 new home subdivisions and over 5,000 lots. And so if you have any questions around how to do a single family home development, or you are thinking about doing a development here in Kansas City, in the metro area, I'd be happy to connect you with those folks, because they are truly the experts. And so we brought them on this deal because having them on site as well as on the team here is extremely important and brings a lot of value to our clients. Here's what we're covering today. We're going to go through our executive summary. We're going to go through our property overview, a location and area analysis, talk through the site layout and plat details. We'll go through some market analysis and comparables, as well as the development opportunity. And I have really an incredible deal breakdown that I think you guys will really enjoy seeing. So again, if you have any questions, feel free to reach out to us in the comments and let us know if you have those questions. We'll be monitoring that and be able to get to those here at the end. All right. So we've got 153 lots here, right? It's on 53 acres. All entitlements are secured for development with very few regulatory hurdles that remain. That is fantastic for somebody who is really coming in and wanting to get this project off the ground, right? We talked about this last week or the week before on our Grandview deal as well, but getting those entitlements in place and having lots ready to be worked on the horizontal infrastructure is incredibly valuable to you as the developer, as the investor here. The cost per lot, right now, the land cost is around $9,100. And we think that's an exceptional value for a fully entitled development in a growing market like Kansas City. It has a strategic South Kansas City location, really great access to 435, 470, and I-49, and all of the top employment centers. We have established infrastructure, right? So there's existing utilities that is going to help significantly reduce development costs and those timelines. And you have the ability to phase this development out. So we are going to present an optimized strategy for your market absorption and cash flow management. Well, let's get right into it, right? Here's a great overview of this project. Beautiful wooded lot. Again, 53 acres. It features mature trees, has natural topography variations, and some excellent drainage characteristics that's going to help its development appeal and future marketability. Again, we also have multiple ingress and egress access points from Granbury Road, ensuring smooth traffic flow. So this just gives you an idea, and it's approved for single-family residential development with all of those required entitlements that are in place. So this is going to be the land right here on this beautiful wooded lot. So it's really in a great location strategically. We're 15 minutes from downtown Kansas City. That means that you have 5 minutes to get to the interstates, right? And 10 minutes to get to shopping centers, right? So you have access to retail and dining and the services that you need. Let me get myself off of the screen here. I realize I'm blocking some of this. There we go. So right next door as well is a park, a city park that's going to have some natural amenities and recreational opportunities that I think will enhance the development's appeal for families and outdoor enthusiasts. Around the area, you have established neighborhoods. So this is surrounded by thriving residential communities, demonstrating strong market demand and property value appreciation that we will talk through here as well. Again, the proximity to shopping and dining and essential services is going to create convenience for those future residents that you're going to have here at your single family home development. So look at the highway access, look at the location. There's golf courses all around this property. Oakwood is just north, Minor Park is just southwest of this property, not too far. So if you're a golf enthusiast, you can hit the courses and hit the links if you so choose to. So there's a great overview of the location of this property. Check this site plan out. This was done by Schlegel and Associates, very great architecture firm here, civil engineering firm, and they have laid this out in a really, I think, excellent way. There could be some changes to this, right? If you like this site plan, but you want to make some minor changes to that site plan, you have the ability to do so, all right? I think it's about 10%. You can't change the site plan over 10%, but I have this site plan available for review. If you'd like to get the full PDF or this whole set, I have it in the due diligence platform on Crexy and on LoopNet. Let's talk through the phases, right? Because this is so important to really test out that market absorption and ability to have cash flow management. So phase one includes 42 lots in the northeast quadrant, right? Our average lot size is around 10,500 square feet. You have street frontage on which is a great priority here. And you also have primary interests established here in phase one. Moving on to phase two, we've got an additional 38 lots in the northwest quadrant. The average lot size there is right around 9,800 square feet. You have a secondary access point here, and this adjoins the community green space. Moving on to phase three, we have an additional 45 lots in the southeast section, and the average lot size there is right around 11,000 square feet. This is going to be premiumly adjacent to the park, so very close to the park here on phase three, and you're going to have some enhanced topographical features. That's a hard word to say. Topographical features, enhanced topographical features there in phase three, right? In phase four, we have our last 28 lots here, which our average lot size is just over 12,000 square feet. These are the largest premium lots. You have mature tree preservation areas, and those are the four phases, 153 lots on 53 acres here in South Kansas City. Again, there is a dedicated green space of about 5.8 acres. Stormwater detention and retention is around 2.3 acres here. So just getting into some of the technical specifications, and your street width needs to be right around 26 feet curb to curb. And the development requirements, we have setbacks, 25 feet on the front, 10 on the sides, and 20 in the rear. Our maximum building height is 35 feet. Minimum dwelling size, right around 1,800 square foot. And you need to have an HOA established here. And you have architectural review guidelines that are included with these entitlements. So if you have more questions around more of those development requirements and technical specifications, please do reach out to us as well. So let's get into some of the comps, right? Some of the market analysis. There's been 74 recent sales, right? So this is property sold in the immediate vicinity over the past 12 months, which indicates a healthy market activity. We have right around 28 days on the market, right? So average time from listing to contract is demonstrating steady market demand and absorption. All right. Our current supply is right around 2.6 months of inventory. So we have a seller's market condition. The demographic trends, the area population growth is right around 2.8% annually, which I believe outpaces the metropolitan average. But look at this, the price appreciation, the annual appreciation rate over the last 36 months is 6.2%. And here's another big component that you need to be thinking about. There's been a very limited new construction pipeline within a 5-mile radius over the last few years. So you have the opportunity to really build something special here in South Kansas City. Here's some of the recent comparable sales. Just remember that these are resale homes, not new home construction, but I wanted to give you an idea of what you could expect in regards to just the area from a resale standpoint. And what you're going to see here is ranging anywhere from $280 all the way up to $364,000 on the comparable sales for the resale. So I think that Woodbridge Manor is going to have a location premium, right? So you have offering superior accessibility to the major highways and the amenities, as well as compared to competing developments. The development readiness, right? Fully entitled, no regulatory hurdles, shows immediate construction compared to competing parcels still in the approval process. So you can get started really soon. And the value proposition, your per lot cost is around $9,000, which represents significant value compared to similar entitled projects averaging anywhere between $12,000 and $15,000 per lot. So that, just breaking that down, existing homes here, you have anywhere from about $120 a square foot. The recent new construction, right up around $175 a square foot. And we're kind of projecting the Woodbridge development can push the envelope a little bit all the way up to $180 per square foot. So that gives you a little bit of the market analysis and the development readiness and comparable sales here for the last couple months in Kansas City. Look, I think that having the ability to get started on this project as soon as possible is very important for developers right now. Taking out some of the the logistical hurdles with the municipality, having those entitlement in place is really de-risks this opportunity for you as a developer. Similarly, with the ability to have a phased development approach, you have the opportunity to optimize your cash flow. And that way you have the opportunity to phase this out and really do it in the right way. So you don't have to develop all of these lots or all of the homes at one single time. Lastly, again, we've talked about the location advantage, but being able to be 15 minutes from downtown, 5 minutes from highway access, and about 10 minutes from premier retail corridor shopping and dining gives this opportunity, I think, for a developer to really build something special here. Okay, so what I wanted to do next before we get into our questions is kind of go over to some of the numbers, right? So let me share this tab here instead of this other one. So what we've got here is kind of a back of the envelope underwriting for you to evaluate, okay? Our executive summary is we have a 42-month phase development. It's fully approved. It's shovel ready. You can get started on the horizontal construction as soon as possible. But we're saying that, at this base case, which we're saying around $400,000 for per home, right, will allow you to generate around $61.2 million in revenue. Our base case scenario gives you about $6.65 million of profit, which has about 16.1% upside analysis. We've spoken about the recent sales here, but again, population growth being at 2.8% annually, which is above the metro average, and the price appreciation has been right at 6.2% over the last 3 years. And there's limited construction, so you have limited competing developments within the 5-mile radius here. We have some more comparable sales here as well for you to analyze. But let's check this out. Let's go into the project cost breakdown. We have two different scenarios here, right? We've got our base case scenario and we have our upside scenario. So our base case is at $400,000 per home. And then our upside scenario is about $425,000 per home. All right. And so what this does is breaks down our construction costs to about $42 million. It breaks down the soft costs, about $5.8 million of 10% contingency in there. You have $4.4 million of infrastructure costs. The land, this project is listed for right around $1.4 million. So we have our land cost in here as well to give our total investment right around $54 million on this project, right? So your gross profit could be around $6 million. Now, I know that every developer, every buyer is going to evaluate this a little bit differently. What we've tried to do here is just break it down in a way that might be helpful to you when you're analyzing all of your different costs. On the upside scenario, check this out. The gross profit goes from $6 million to $10 million. Your profit margin all the way up to 16% and a really high return on investment. So here's our detailed cost analysis, right? So it gives the total project cost around $54 million, around $356,000 per unit, right? Okay, so here's our sensitivity analysis. So we've got at the $375,000 average price range, right? Our profit is around $3 million, okay? And our 5.3% margin. If we go to our base case scenario, we have a $400,000 average sale home price. It's right around $6.6 million of profit or 10% margin. If you are able to develop a community and you start to see that there's big demand and you might have some specifics that buyers are really asking you about, again, reach out to us on those specifics and you can push those average prices to $425,000, which is happening across the metro. Your profit can go up to $10 million in that upside scenario here, right? So let's look at the development timeline and phasing. I think this is a really cool way to kind of look at this. So phase 1, months 1 through 12, we're trying to get 40 units done, right? In phase 2, we're working on that 38 units. Phase 3, we're going for another 38 units. In phase 4, we're finishing out right around 37 units. So this gives you an idea of what that cash flow can look like over those months. All right. Our target pace is to sell 3.6 units per month. Our pre-sales goal would be right around 25 to 30 units before phase 1 starts. Average construction time around 8 months. And our key milestones are to try to get that infrastructure started as soon as possible and deliver that first home in the first 9 to 12 months. Just want to speak to the location and strategic advantages one last time. I think that the highway access, the downtown proximity, the retail and amenities really make this project sing when you think about doing a new development or a new single family home residential community. Look, some of the high risk factors, right? This is with all developments, but you have market price volatility, right? Sales prices below $375,000 could really impact your returns, right? So your mitigation on this would be to really understand those market fundamentals and have a strong pre-sale strategy. Again, something that we can help you with. Something that's been on everybody's mind has been construction cost inflation, right? Material and labor cost increases. So what we're trying to do here is try to figure out how can you get fixed price contracts? How can we phase this out in the best way? And then your absorption rate risk, right? So sales pace below 3.6 units per month is, the market analysis right now supports that pace, but you need to have some pricing flexibility in that. Those are some of the higher risks. Some of the medium-term risks, I would say, interest rate changes, right? I mean, that's going to impact the buyer affordability and financing costs. Again, in Missouri, there is a program that allows for first-time home buyers to not only not bring much money down for a down payment, but actually can get a second loan to help with that down payment assistance. So reach out to us. We have lenders that can help you with that. And so, yeah, we're targeting those buyers that are going to be able to apply for that type of loan and be able to really bring in first-time home buyers here. Competition, there could be some new developments entering in the market, something that we can help with and help you understand where the competition is going to be. And we also always have our seasonal variations, right? So weather and seasonal impacts. It gets really hot in Kansas City. It gets really cold in Kansas City, and that can impact when you start. So your phase timeline needs to account for that seasonality as well. Okay, so here's our investment thesis on this project. Woodbridge Manor represents a rare combination of immediate development potential, proven market demand here in Kansas City, and strategic location advantages in one of KC's fastest growing corridors. With the entitlements in place and the infrastructure planning complete, this opportunity eliminates the typical risk and delays associated with that residential development. The immediate value drivers here, speed to market, right? So you don't have as much regulatory delays or approval uncertainties. The proven demand is there. 74 recent sales with 28-day average absorption. You got a premium location here, and your cost advantage is below market land cost per entitled lot. So some of the long-term appreciation factors is demographics, right? We talked about the 2.8% annual population growth that's above the metro area. The limited supply, there's constrained new development happening in this location. We have a good infrastructure all around this property, so you can tap into that infrastructure. Okay, so if you're ready to move forward or you want to learn more information about this, you can head over to Crexi or LoopNet, or reach out to myself or any one of our team members to be able to evaluate this project. I think it's a fantastic deal that many people have already reached out to me about that we are talking with. So I'm going to go back to our maps so everybody can see a little bit more about this property, just so I can, while I get through these questions. Here we go. So I want to just make sure this map is up while I'm answering some of these questions that are coming in right now. Let me get you back up on the screen here. Okay, so first question coming in. All right, so what's the current status of utilities and infrastructure on site? Okay, so all major utilities are nearby, right? Water, sewer, electric, gas, okay? You just need to evaluate the due diligence materials. We have all of the easements that you need to be reviewing in our due diligence packet and our data room. So have more information on that, can get you connected with very good local civil engineers to be able to evaluate that. Okay, so how confident are you in the 42-month timeline? What could delay it? Well, I mean, I think that timeline is conservative, but the biggest risk is going to be any weather delays in the winter months, but we built in some contingencies, as every developer should. And I think that phased approach really does give you some flexibility in regards to what you're doing in delivering this project. What's driving the 3.6 months absorption rate assumption? Okay, so market data shows 74 sales in the immediate area over 12 months. At 28 days average on market, the demand is proven. And I think we're actually being conservative there. There's just not been any new home development here. Okay, how did we get to the $140 per square foot construction cost? Look, current Kansas City market rates anywhere between $120 to $150. We used $140 kind of as a realistic middle ground. Plus, we have relationships with proven builders and contractors who I think can deliver at that number. Now, that can go up or down depending on your end uses and or the finishes that you decide to use there. Okay, so confidence level on hitting the $400,000 average sales price. Look, I mean, recent comps in the area range from $220,000 all the way up to $365,000, but those are existing homes. So new construction typically demands about a 15 to 20% premium. So I think $400,000 for 2,000 square foot homes is probably a pretty good market to be at. How do we know that the market can absorb 153 new homes? Look, I mean, look at the fundamentals, right? You have 2.6 months of inventory. You have 2.8% population growth, which is exceeding the metro average. And you have limited competing developments within 5 miles. I mean, I think the market is underserved and you have the opportunity to evaluate those fundamentals. What if interest rates keep rising and kill the demand? Look, our target buyer demographic has strong credit and down payment capacity, but in the Missouri markets, you have the ability for that first time home buyer opportunity there. Plus, the $400,000 price point, I think, keeps us in that attainable range, even with some of those higher rates. Okay, great question about the area. Why is this area specifically attractive for development? Well, 15 minutes down to downtown Kansas City. You have immediate access, surrounded by appreciating neighborhoods at 6.8%. It's a sweet spot of growth without the premium land costs, right? So I think that area, and you have to go look at it, right? It's a beautiful wooded location, great highway access in South Kansas City. What's my biggest concern on the deal? Look, honestly, I mean, making sure that you don't over improve for the market, right? That's why we're keeping the home sizes around 2,000 square feet and targeting that $400,000 price point. I think that's the volume. It's a volume market here. You also have the opportunity to evaluate any build for rent scenarios here, right? You could phase that out. I know build for rent is definitely a big, headline in the news, and a lot of people are evaluating that. Are there other developers looking in the same area? Yeah, of course, but most are still fighting zoning battles and or regulatory hurdles. I mean, we have the entitlements locked in here. Time to market is everything in this business. So what happens if we can't hit the 25 to 30 pre-sales target? Like I don't think you would break ground on phase one until you have a really good strategy in place on those pre-sales. That's just not negotiable. We can help you with that. We can help you bring those buyers to the new home subdivisions. We do it on a regular basis. The pre-sales validate demand and secure your construction financing. Okay, so a couple other questions here. What separates this from other development opportunities? Well, I think 3 words here, right? Entitled, it's proven, and it's profitable. There's no zoning risk. It's got demonstrated absorption and have margins that work in any reasonable market scenario. All right, so we have 153 lots, 4 phases in a great South Kansas City location. D.R. Horton is here in Kansas City building. Lennar is here building in Kansas City. We have population growth in this 5-mile corridor at 2.8%. We have home appreciation at 6.2%. People are moving to Kansas City. They need places to live, and they want good highway access. This is a great opportunity for you to bring to market a brand new subdivision in a great location, surrounded by some awesome golf courses. Okay, I think that gets through just about all of the questions that we've had. If I missed any, just feel free to reach out to myself or go over to Crexy and reach out. We have a full data room there on Crexy and on LoopNet with much more information, the full site plan, all of the utility easements that you need to evaluate. If you would like this offering memorandum or more information about comparable sales, what's happening in the market, we have that information as well readily available to you. We try to keep these deal spotlights right around 30 minutes. And today I achieved that target right at 28 minutes. This is the Woodland Manor subdivision development, 53 acres, 153 lots. Here's a great picture of it here. It's approved for single family residential development. The permits are in place. Entitlements are ready to go. $9,150 per lot for you to start building here in Kansas City. And I think that is going to end up on this deal spotlight. So if you would like more information, again, go over to Crexy, Woodland Manor. I've been posting about it on LinkedIn. You should be able to find it on all the listing platforms. We have more information. If you have questions around builders or phasing or timelines or any absorption, anything like that, please do reach out to us. It's our goal to bring transparent communication to you for these projects on a regular basis. We have many other deals very similar in stature that we can talk to you about. We have listings across flex industrial, medical office. We have multifamily. We have land for development on the industrial side as well as on the single family home side. And a lot of the stuff that we're working on and a lot of projects that we're working on, we're not actually having them listed live. So if you do have a specific need, please do reach out to me. If you have a 1031 exchange timeline, please do reach out to me. We have replacement properties ready to go, and the case studies to prove it, they will be available on our website here soon. But if you would like to get some more information about the case studies that we've recently completed, please reach out to myself or any one of our teammates, and we can get you that information as well. Well, thanks again for tuning in. Thanks for all the great questions. We think Kansas City is poised for a lot of growth. I think the data is supporting that opportunity to capitalize on that growth, and we'd like to be your partner on the commercial real estate side. This is Logan Freeman with Midwest Commercial Real Estate Advisors. We'll be back here likely next week with another episode of the Kansas City Commercial Real Estate Market Pulse. I'll see you next time. Thanks again for tuning in.